Hey, welcome to StoryTrading. We got a special presentation by QYOU Media CEO Curt Marvis today. Before we turn it over to him, got to go through a disclaimer. StoryTrading is not an investment advisor. Investing in securities involves significant risk of loss. And this presentation is being recorded. It will be posted to our social media account and made available to our VIP members in our community. Quickly, before we look at QYOU Media, just want to point out, if you go to StoryTrading.com, click on performance. We just updated our website, so that performance indicator will be over here in the little hamburger menu on the top right. We actually just made QYOU Media a VIP pick on June 11th, right? John M is going to own that pick, so it's down just a little bit since it was presented as a VIP pick, or since we started tracking it as a VIP pick. So you can go over to StoryTrading.com and check out all of our picks. We're dramatically outperforming the market. And with that, before Curt, let's look quickly at a chart so everyone can see QYOU Media right there. And we can now turn it over to you, Curt. So welcome. Thank you for joining us.
Yeah, great. Thanks for having me. I have the same statements that you had there about this being public information. One thing I'll apologize to everyone. We're in the midst actually of doing a refresh of our corporate presentation. So you're actually going to be seeing today the very beginnings of that refresh, but it's not completed yet. So I'll try to let you know when we've posted up onto our website a new version of this, and should be sometime in the next couple of weeks.
Great, thank you.
So again, I'm Curt Marvis. I'm the co-founder and CEO of QYOU Media. We've been at this for a while and had our twists and turns and stops and starts and number of missteps along the way, but we finally feel like we've really got our feet underneath us, which is what I'll explain here briefly in a moment. But before we get into the specifics of that, I like to sort of introduce, for people who aren't familiar at all with our business, what the drivers are for our business. And we really look at ourselves as basically following three macro trends in the overall world of social media, video, and commerce right now. The first one, which I refer to as the world of social video, which really started with YouTube back in 2005, 2006, and what we define as social video is video that's more interactive. It's not a one-way. It's not like television where you're watching a one-way medium, et cetera. It's video that people forget a lot of the times that the original brand identity for YouTube was broadcast yourself. And that whole concept of an individual being able to put forward their own video content and have it basically accessible to anyone. I mean, not dissimilar in a sense, in a way of what's happening here, where Ben's a financial influencer from my point of view, the way I would define that. He's using video and social video as part of his arsenal of ways that he communicates with people about what his thoughts are. YouTube obviously is that in a huge way and sort of part of the fabric of everybody's lives right now. Instagram has become that. Facebook is part of that. TikTok obviously is now part of that. Snap is part of that. So there's this whole world of social video that just has staggering statistics around it in terms of the amount of content that's consumed, the billions of people on a daily per day around the world that are watching video like this. And so that's the first big macro theme that we live in and are part of. The second one is a phrase that you'll hear more and more going forward as well, which is what we call the creator economy. What does that mean? Well, the creator economy is really this business of so-called influencers. And most people, probably would be most familiar with somebody like the Kardashians, that might be the largest of influencers, where brands and products are paying them a lot of money for them to be able to promote those, whether it's obviously promoting them or promoting them through just including them as sort of a part of content they're creating. The so-called influencers, which are the people that are creating all these content, all this content on YouTube, on Instagram, on TikTok, Snap, etc. These are now pretty much known as creators. And the creator economy is the business that's been evolving for quite some time and is evolving at a very fast pace today, which is that these creators are now becoming involved in transactions. And there's a transactional element to what they're doing for a long time now in terms of them selling other people's brands and products. But increasingly, it's becoming something where those influencers are directly selling to their communities and to their followers. I mean, again, another example to use would be if Ben said, hey, I've got this stock performance tracking software tool that I've used from whoever it might be, you know, it's really worked for me, I love it, et cetera, et cetera. Well, he probably in this situation would be receiving some form of compensation to be able to effectively pitch that to his audience. Same thing, whether it's makeup, whether it's clothing, whether it's food utensils, whatever it might be, cooking utensils. This business of influencers selling directly to customers is growing massively. In China, the so-called category now of social commerce, which is kind of creating the social video with the influencer-driven and creator-driven commerce, is now over $300 billion as an industry in China this year. So it's an example of how big this business is getting. And if any of you have kids, I don't know how old the people that will view this video will be, but if any of you have any children, or if you yourselves are under the age of 25 or 30 years old, then you know that, you know, you're on your phone all the time or on your computer or whatever it may be, looking at things that are happening through the world of social video that are being pitched to you by these so-called creators, and therefore making decisions about transactions around that. So that's the second one. Third one is India. Some of you may or may not be familiar with and have followed in any way, shape, or form what's been happening in India over the last decade or so, but it's clearly one of the fastest growing economies in the world, if not the fastest growing in certain categories and segments. People may be unaware that it's Facebook's largest platform category in the world. They have about 320 million people on Facebook in India. It's Instagram's second largest category of users in the world, with about 120 million users, just behind the US at 140 million, and that'll probably be bypassed here in the next year. It was TikTok's most important country in terms of what they were doing until the Indian government got into it with the Chinese and banned it. Now there's a whole series of sort of TikTok lookalikes and brand alikes that have launched there. So it's an incredibly active and important marketplace in terms of social media and social video. It also has obviously the long tradition of Bollywood, which would have sat for decades now, either behind or even ahead of in terms of the amount of content with Hollywood. And so there's a massive, massive amount of content and social video that's being created in India. In addition to that, there are over 625 million people in India who are 25 years of age or under. And so when you look at sort of the macro theme of what's happening in India, when you look at what's happened with companies like Netflix, Amazon, and others, Google, that have invested billions of dollars over the last 3 to 5 years, including during COVID, into the Indian marketplace because they recognize the importance of it. That's the third macro theme that we sit around. And so all of that drives into what we're doing with QYOU Media. It's taken us a long time to build our foundation to be in place to be able to leverage all this, but hopefully when I show you these next slides, you'll see where we're at. So one of the things that might throw you off a little bit is one of the first areas we decided to grow our brand in India, which is now India's fastest growing youth brand, was on television. Why television? Television is still a growing marketplace in India. Television is still very, very important in rural areas, tier 2 and tier 3 cities in India, which is where we see much of the growth that's also happening around social commerce, social video, and the creator economy. And television becomes this massive loudspeaker for us to be able to build our brand and get the message out. So the first thing that we did, although it might seem counterintuitive, was to begin a television channel, which is called The Q. We launched the Q by building first a content asset around social video content that was on this channel. I have a long history, long ago. Well, that's all the stuff that you see behind me from when MTV was the hottest youth channel in the United States. I was one of the largest producers of videos back then. That's how old I am, unfortunately. You'll see that much of what we did was modeled after that same mindset of where the music video for MTV was the driver of a whole generation of basically what was happening from a cultural perspective and a viewership perspective. The same thing happens in today's world around social video. So we've put all of the best of social video in India onto one channel, and that channel has taken off like a rocket ship here in 2021. If you look at that chart in February, these are based on what are called BARC ratings in India. BARC, which stands for Broadcast Audience Research Channel, is the Nielsen ratings of India. It's the ratings number which connects to how you sell ads on television. And we've gone from a 4.4 rating in India to averaging over 45 GRP, what are called GRP gross rating points, over the last 10 weeks. This meteoric rise has a shoot past all of the other youth channels in India, including one called Bindos that's owned by Disney, including MTV India, which is owned by Viacom, and another channel called Zoom, which is owned by the Times of India Group. These are major, global media companies. And so we now have this incredibly fast growing television channel, which is, I always call it our loudspeaker, which now last week reached almost 100 million people on television. And that's beginning to fuel the growth that we've got across other digital and OTT platforms. What's driving that growth? As I mentioned, we started this whole thing by putting together the asset and content library of the best content that was available in the world of digital in India. We now have over 300 YouTube channels or Instagram channels from individuals that have content that we're aligned with. That represents over 1,000 episodes of content that we have, because we'll take cooking shows and put them together into a TV format. And we've got a huge number of influencers that are now knocking on our doors, wanting to get onto a television platform because it's the only platform they can't get onto. So we refer to the Q India's television distribution as kind of our Trojan horse strategy, which this is what was always intended to build our brand there, create a great identity with the audience that we were targeting and going after. And just 2 weeks ago, we peaked at our largest gross rating point level of 53 GRP, which is now bumping us up against some of the major mainstream channels that exist in the India TV environment. What are we also doing with distribution? That top line that you see on this slide, you wouldn't know these, but these are all major television distribution outlets in India, similar to Comcast and DirecTV and our Dish here and Time Warner Cable, et cetera, Spectrum here in the US market. The next line below that are really many of the premier OTT and mobile distribution partnerships that we've created. And below that sit some of the connected TV, app-based and mobile-based partnerships we've formed. That all adds up to us being on platforms now that reach 730 million people per month across all of those platforms. And we're reaching approximately 100 million people per week at this point. All of that is building the core audience for us. It's building our brand, and it's giving us the belief that we're more than headed in the right direction in terms of the foundation that we're building. How does that all relate to our business and revenue? We've really been pre-revenue in India since we've been building this over the last 2.5 years. We've really started to generate revenue this year in India in 2021. I just put out guidance about 2 or 3 weeks ago for the quarter that we're currently in, which is 2 to 2.3 million in top line revenue for calendar Q2. Our fiscal year ends June 30, so we're actually in our fiscal Q4 for 2021 right now. In the next 2 quarters after this, we're projecting between 3.1 at the low end and 3.9 at the low end in the following quarters, and basically have provided 3 quarters of revenue guidance from 9 million to 10.7 million in ad revenue in India. The other thing that's extremely encouraging about all this is that where we were struggling to get blue chip advertisers onto the platform, as we've started this whole adventure, especially onto television, is we've locked in over 8 major advertisers over the last 2 to 3 months for the channel. And this includes, again, P&G, Unilever, Pepsi, et cetera, et cetera. So we're on our way to a revenue trajectory, which we expect to grow massively in 2022 and beyond. How are we also advantaging this? Brand Capital International is the investment arm of Times of India Group. Times of India Group is about a 187-year-old Indian conglomerate that owns major newspapers, television channels, radio, outdoor, digital websites, et cetera. And Brand Capital is making a strategic investment into QYOU Media to help us build our brand in India. We've had a couple of delays because we need a approval from what's called RBI, which is the Reserve Bank of India, for this to happen. I won't get into the complexities of that, but it's been delayed largely, frankly, because of the problems around COVID and the government shutdown that occurred there over the last 2 to 3 months in a big way. We expect this to close any day now, and that's going to leverage what will be really the beginnings of our first marketing campaign in India, because to date, we really haven't done any marketing. It's all been word of mouth marketing that's been generated by the influencers that are featured in our content. So we're looking forward to really building a brand, because frankly, in terms of the sort of blue sky, white space opportunity behind what we're building with the Q in India, the building of a brand is key to that. How are we also driving that? We just recently, about a week and a half ago, announced our acquisition of Chatterbox. Chatterbox is among the leading influencer marketing businesses in India. They have access through their database to over 300,000 of these influencers and creators in India. They also represent 30 of their own influencers directly, and they're continuing to build what they call Chatter Represent in India to have more direct relationships with them. They have blue chip brands that they've associated with across the board, including many of the same advertisers that you'll see on this slide, whether it's P&G or Amazon, et cetera, that we're now in business with from an advertising perspective. And the key to this is that what we believe is unique in terms of what we're offering in India is the ability to do a true 360-degree marketing campaign there, which is where we're literally the only brand in India that has a youth-oriented television brand, has youth coverage across all major OTT and mobile platforms directed toward youth, and have direct relationship with the creators and influencers themselves. So we think that our ability to be able to deliver, especially now with Chatterbox as part of our business, this kind of 360-degree ad campaign going forward is extremely important to the growth of the business. Part of that's been leveraged by the influencer marketing business that we've built here in the US. That's primarily been driven by clientele in the entertainment, the movie space, and the gaming space. It's growing rapidly as well, and a lot of sort of the best practices that we've formed around what we do here in the influencer business in the US is now being transferred over to the India business and vice versa. We've worked here in the US with some of the largest social influencers in the world, and we continue to do that on a regular basis. And so the integration of what we've built as a foundational platform and business here in the US market around influencers, creators, creative content, and now brands and advertisers really sits foundationally at what we're looking to do going forward. Final piece is that, what does this all mean for the future? If any of you are not familiar with the term social commerce, I'd encourage you to go onto Google and type in social commerce in China. If you read at all about what's happened in social commerce in China, you'll see that India, if you were to design a country to be the next country that was going to see the same sort of meteoric rise in social commerce, it would be India. And that's as a result of the fact that it's happened out of, again, what they call tier 2 and tier 3 cities and rural areas of China. It's a massive, massive business, this business of people being able to purchase from videos and from influencers directly. And much of what you can see us doing, I haven't spoken a lot about this publicly. You'll see a bit more about this when we complete a new slide deck. But much of what we're driving for in India is what we believe will be there, the extraordinary and growth that's going to occur around social commerce in India. It's already started. And so we think that we're incredibly well poised as a company that has the still relevant and still extremely important and crucial television presence to drive what we've built underneath that on the influencer business and on the distribution side of the business around digital and mobile platforms. Finally, the way that we expect to be able to do that is we think we've got an A-list group of talent doing that. As I mentioned, I have a long history. I was president digital at Lionsgate previous to starting this business. I've always been in and around youth-oriented brands and youth-oriented products, going back all the way to my MTV days. Simran Hoon, our recently named CEO of QYOU India, comes from 13 years at Viacom, building one of the top 4 leading television brands in India called Colors. She took that from nothing, from a new channel into a channel that was delivering hundreds of millions of dollars of ad revenue. And part of the reason we were able to get her to join our company is she sees that happening again with what we've got at the Q. Pranay Swarup is I would argue, one of the leading young entrepreneurs in India today. He sold a business prior to starting Chatterbox. This is the second exit that he's had with the business that he's created. And Glenn Ginsburg, to his right, is arguably one of the most successful and experienced people in the influencer marketing business in the US. Underneath that, we have a strong team of board members. I'm not going to go through each one of them now, but these are people who have extraordinary amount of experience, decades in most cases of experience in the media technology and an entrepreneurial world. And so we feel like we've got a management team in place. We've built a foundation for massive revenue and economic growth for the company. And we believe that we've proven now that we have a brand that's captured the imagination of young India and are well on our way towards building a brand that is already becoming a household name there, but in a year or two we'll definitely achieve that. So that's the very rapid fire background on who we are and what we're all about, and we're ready for all your questions.
Make sure to follow us on StoryTrading, YouTube, StoryTrading, Twitter. Really helps us out, increase our reach. So appreciate it if you do that. And thank you very much, everyone. We will see you next week.